The European Central Bank, or ECB's balance sheet, is going parabolic again. So the ECB's balance sheet is almost up to 80% of their nominal GDP. Insane. The increase in the European Central Bank's balance sheet has gone up a whopping 140 billion euros recently, as you can see there with the chart on your screen. The Fed's balance sheet is also rising rapidly, up around 200 billion in the last 6 or 7 weeks. The Fed's balance sheet is up around $800 billion since early January, while the Federal Reserve members are all doing public interviews and comments and speeches talking about potentially raising interest rates 18 to 24 months from now, ending or reducing QE. But all of this is bullshit, because the reality is the Fed's balance sheet keeps growing. However, right now, the market believes, a lot of people on Wall Street and money managers still believe, that the Fed is telling the truth, and they're starting to price in interest rate hikes in the not too distant future and taper talk. And the market is looking at balance sheet growth and is believing that the European Central Bank will grow their balance sheet faster than the Federal Reserve. Now, the European Central Bank is not granted the privileges, the exorbitant privileges of the world reserve currency, but is also not granted the crazy privileges that started in March of 2020, where they're allowed to do special purpose vehicles off balance sheet, like the Federal Reserve and US Treasury are working in cahoots with each other, where the Fed can move trillions of toxic sausage assets, mortgage-backed securities, commercial real estate mortgage-backed securities, collateralized loan obligations, junk bonds, leveraged loans, all these different derivatives off balance sheet. And that is probably why, besides the taper talk and the talk of raising interest rates, the dollar index is starting to rally, or at least one of the major reasons why. So when the Fed starts to talk about raising interest rates or reducing or eliminating QE, the dollar index can have a rally. If you're not familiar with the dollar index, it's about 60% of the weighting of the dollar index is the euro. So the majority of the dollar index basket is the dollar versus the euro. So if the European Central Bank is trying to drastically grow their balance sheet, then the market is going to weigh which central bank is growing their balance sheet faster, and that's going to affect the foreign currency exchange rate and the foreign currency markets, and therefore the dollar index, because the euro is the largest weighting in the dollar index. So unfortunately, I'm seeing a lot of the same stupid mistakes of the 1920s and the 1930s. Currency wars, beggar thy neighbor monetary and trade policies, competitive devaluations, central banks monetizing debt and other toxic sausage assets, and then lying about it. And this is how you get stagflate, tax, lie. And it's not going to show up in all the government statistics, in the inflation rate. It's not going to show up in the GDP. It's not going to show up in the unemployment. The reality is that shrinkflation, whether you're here in the United States or in Canada, Australia, or in Europe, is getting even worse. There's just tons of examples of this on all the major news networks now, talking about shrinkflation in the grocery store and other consumer items. And unfortunately, it's going to get worse before it gets better, because now that oil prices are rallying, higher oil prices will start to go into the cost of goods sold and throughout the supply chain. So you're going to start to see even higher shrinkflation and stagflation. That's probably not going to show up at all in any of the inflation data, because they don't want to properly account for inflation and oil input costs, because oil is used in plastics, transportation costs, so many other items, fertilizer, so many other items, oil or oil-related products are used in so many things, and the cost of that is going up. There's no way the government is going to accurately account for this. Even if they wanted to accurately account for this, they probably still couldn't accurately account for this. Finally, if you want to help keep content like this free so it doesn't all end up behind a paywall, or you want more in-depth research, financial education, and analysis, there is over 170 now articles, charts, and audio podcasts behind the paywall, including 14 new articles out in the last 6 or so weeks, and a 45-minute long audio-only interview with Sandstorm Gold. There's also a very long and extensive article that just came out about the stupid analyst downgrade on Monday, and then the enormous deal, one of the 3 largest in Sandstorm Gold history, the $138 million deal on Tuesday. If you want to read about that, there is extensive analysis on that behind the paywall for patrons. It is only $5 a month. It is one of the best deals out there. Good luck getting that type of analysis on Seeking Alpha. The majority of articles coming out about Sandstorm Gold are complete and total garbage, and from the majority of investment banking analysts who make 10 or 20 times the amount of salary I make in a year are complete and total garbage. I still don't think they understand the business, despite how the business has been around for over 10 years now. It is throwing off enormous amounts of cash flow. It's going to be up to about $9 million per month in free cash flow after this latest deal.